You've seen the TikToks, the shiny glass apartments in Canary Wharf, the high-end German cars, and the promise of a £5,000 monthly salary. You arrived at Heathrow expecting a land of effortless wealth. But 6 months in, the reality hits. The UK doesn't just give you wealth. It tests your ability to keep it. Between a 40% tax bracket, a rental market that feels like a battlefield, and a credit system that treats you like a ghost, the UK dream can quickly turn into a financial nightmare. Today, we are stripping away the filters. I'm going to expose the 5 structural traps that break most immigrants and high earners in this country, and more importantly, how you can navigate them to actually build legacy wealth. This is the reality check you weren't given at the embassy. The biggest shock for any new arrival isn't the weather, it's the payslip. In the UK, the gap between your gross and net salary is a canyon. If you earn £50,271, you hit the higher rate tax band. Every pound above that is taxed at 40%. Add national insurance and potentially student loan repayments, and you are losing nearly half of your hard-earned money before it touches your bank account. The pitfall. Most people simply work harder, taking on overtime, only to realize they are stuck in a tax trap where the extra effort yields diminishing returns. Pro tip: you must become tax efficient. Use salary sacrifice. By diverting your over-the-limit earnings into your workplace pension or a SIP, you bring your taxable income down, keep your child benefit, and effectively get a 40% instant return on your savings. Don't just earn more structure better. Expectation. A cozy flat in a nice borough. Reality. Bidding wars. 6 months rent up front. And the hidden cost of council tax. The UK rental market is currently at a 20-year high in terms of demand-to-supply ratio. The pitfall. Ignoring banding. Many people rent a property based on the monthly price, but forget that a Band D or E property can add £200 to £300 to your monthly outgoings in council tax alone. Pro tip: before signing a lease, check the EPC rating. A D or E-rated flat will bleed you dry in energy bills during a UK winter. Also, if you live alone, you are legally entitled to a 25% single-person discount on council tax. If you haven't claimed it, you are overpaying by hundreds of pounds every year. In your home country, being debt-free is a badge of honor. In the UK, having no debt makes you a ghost. If the algorithms at Experian or Equifax can't find a 3-year history of you managing credit, you won't even get a basic furniture finance deal, let alone a 3.5% mortgage. The pitfall. Waiting to build credit. Many immigrants wait until they want to buy a house to check their score. By then, it's too late. Pro tip: start on day 1. Register for the electoral roll. It's the fastest way to verify your ID. Get a credit builder card like Lockbox or a high-interest credit card. Spend £20 on groceries monthly and pay it off in full. You aren't borrowing money. You are buying a reputation. By the time you need a mortgage, your ghost status will be replaced by an excellent rating. Wealth in the UK is protected by wrappers. The ISA and the pension are your 2 best friends, but the rules are tightening. The pitfall. Keeping your life savings in a standard current account. With inflation fluctuating, your money is losing purchasing power every hour it sits in a 0.01% interest account. Pro tip: maximize your £20,000 ISA allowance now. With the 2027 reforms approaching, there are talks of capping total tax-free pots. Use a stocks and shares ISA for long-term growth and a cash ISA for your emergency fund. Furthermore, remember the 7-year gifting rule. If you intend to pass wealth to your children, start the survival clock early to avoid the 40% inheritance tax trap. The rich in the UK don't own assets in their own names, they own them through structures. Finally, the most exposed part of the UK, the burnout. The cost of living here is high, which forces many into a survival hustle, working 2 jobs just to cover a Zone 2 rent. The pitfall, the lifestyle creep. As soon as you get a raise, you move to a better flat or lease a better car. You stay on the treadmill, never actually getting closer to freedom. Pro tip: set a UK floor. Decide on the minimum lifestyle you are happy with and invest 100% of every pay rise above that floor. The goal isn't to look rich in London. The goal is to be wealthy enough to leave the London grind whenever you choose. True success in the UK is measured by how much time you own, not how much stuff you have. The UK is a land of immense opportunity, but it is a rigged game for those who don't know the rules. You now know the traps, the 40% tax cliff, the rental hidden costs, and the credit ghost syndrome. Your job is to stop being a retail resident and start being a HustleWise strategist. If this reality check helped you, hit the like button and subscribe to HustleWise UK. We deep dive into the laws, the hacks, and the strategies that the high street banks won't tell you. Stay smart, stay strategic, and as always, keep hustling.